morning, traders. Today's reminder is simple, and that is, guys, go where the volume is. All right, so if you're looking at this options chain, if you're looking at your watch list, and you're looking at the strikes that you were likely to trade, that you selected, that you're like, you know what, I'm likely to trade any of these stocks or any of these contracts if it goes on the calls or if we go on puts. And you can clearly see here that one of them stands out above the rest, right? And it's this 1900 call strike that expires, right, on January, right? The January strikes here. You can see here, these got a lot of volume. It's like, why is so much volume going there? So you need to remember to go where the volume is going, because it'll be a lot easier for you to get in, a lot easier for you to get out, and it's likely to be more profitable. If you go over to the chart, you'll see how this contract had a massive rally the day before, and then you can see here that it still continued to push higher even a little bit before it actually started to pull back. But yet the options volume is still there, guys. So go where the volume is. You can see here clearly that the volume was always there. So just follow where the volume goes. And good luck today. Execute, be efficient, and I will see you guys on the next one.
More money, more money! Ah, all very exciting.